What's going on, guys, and welcome to another Full Transparency Trading session. This is your host, Sebastian, and I want to talk about success or just in general being a decent day trader and how you reach a level of success that you're comfortable with, right? But first, let's go over what's going on in the computer background here. Everywhere I go in my daily life, on my phone, on the wall in my office, on the computer screensaver, is my vision board. And I know it seems cheesy and stuff like that. Vision boards, I hear it all the time. They work. They're very helpful, and it's just a focal point of things that you desire to have in your life, like being debt free, financial freedom, traveling, good relationships, animals, whatever the case is, healthy lifestyle, beautiful home. It's just something, a focal point. That's all it is. It's just something that you're looking forward to having over time. For me, it was being a successful day trader and things like that. But what a lot of people don't know is, like, you see the end result in any trade. You see me take a trade, make some money, get out of the trade. You see me take a trade, lose some money, get out of the trade. Whatever the case is. But what you don't see is the hours and hours and hours that I spend studying the market leading up to the day that I'm going to actually take the trade, or leading up to the time that I'm going to take the trade. You might see me get up at like 2 o'clock in the morning and post a quick video, and I keep them short just so that they're not these 10, 15, 20-minute, hour-long videos that you have to watch while you're watching me day trade, because hours and hours and hours of work lead to just a few minutes in a day trade at the end of the day. But I'm going to go over just a process that I go through every week and sometimes daily, depending on how the market is moving, to set myself up for success in the week. Let me pause this here while I log into my Thinkorswim. Okay, we're back. This is something that I do every time we're heading into a new month, right? So, like I said, I've been day trading for like a year and a half now, and this is just my best practices. This is not something that you have to do. There's no one way that's going to catch. There's no perfect way to day trade, but this has worked for me all this time, so this is what I continue to do. As you can see on the 15 minutes, we form a range, and every range has a thereabouts ceiling, an area where of resistance. And if you look at this white line that I'm putting up here, I'm going to put a price chart there, add a drawing, the price line, and then just put it right here, right? Notice that majority of the trading days we fall below this line, right? Then we're going to look for the middle area. The middle area would be right here. So I'm going to put another drawing line right there. And we'll put it to the wicks on this one, right? So right there, the middle, and then we'll call this the floor. And every single trading day for months we'll have these. You'll have areas where you wick out, create a floor, and notice how crazy that is. That wick right there is almost exactly 50%. We're a little bit lower than 50%. And some days, yeah, we will wick below it and go beneath it and stuff like that. But that'll be your general range. The top part of the range when we're trading most of the days here. The bottom part of the range, some days we'll trade there. Go back up to the top part of the range, stay there, come down to it, and then go back up to the top again. And that just happens again and again and again as trading goes on, right? But what I'm looking for when I'm entering a new month is I'm trying to find a trend. So if I want to find a trend, I'm going to look for the 3-year 1 week. And sometimes I'll do 5 years as well. And I'm just going to go to every September. Here's a September right here. And in this particular September, August, we were pushing down. September around the 5th or whatever, because after Labor Day, we push up. And then like the latter half of September, we fall down. Let's go over to another September. December, October, we can't see that. Let's look for another September. Here's another September right here. Again, here's September. So August, second half we're going down, second half we're going up. September, sometimes we continue the trend for a little bit and then we start trending down. So I'm looking for the second half of September to start trending down once we hit these highs. Let's see if we can find another September. We can't quite find another September yet, so we're going to go and add a 5th year. So we'll look at the 5-year 1 week, or the 10. We'll look over 10 years, even better. So we'll look for right here, highlight this area. As you can see, we'll come out of August right around here, and we'll kind of flatline, and then we'll start to decrease, and then we'll fall, and then we'll start to go back up as October comes along, and the market will do that. So now we're going to shrink on down again, and then we'll go to the next September, which will be right about here. highlight that area. And let's look at August. It's kind of flatlining. This September it kind of went up, up, up. So there's not a super consistency across Septembers. And I think that has to do with election years, major moves in the stock market. But it seems like August, we trend up, then we pull back down. This August, we're ending on a high note. So it's one of those more unique years. Let's look up another September. Right around here. July, August trended down. So yeah, it seems like September kind of has a peak and then kind of trends down. So you always get like right around Labor Day, the days after Labor Day, we get that final push up, and then it seems to start falling down after that. Let's go look for another one, and here is another one. July, August. In this particular year, we were trending down until September, and then as you see, that first week in September opens up, we push up to the top, and then we trend down again. So it does seem like there is a consistent theme for September. September here, August, September, we're trending up. We hit right after Labor Day, and then we start trending down. So I'm looking for that exact same thing to happen this time of year. Let's check on this one right here. August, going up, going up. There's the end of August right there. Yeah, see, September, second half of September coming down. So this first half of September, I'm looking for the trend to continue, maybe push a little higher. And then after that, fall leading into October. That seems to be a trend. I don't know why. Maybe that's because all of the earning seasons are over with. I don't know everything about day trading, but this is where I start, right? Then after that, we're going to head on over to the 4 hour. And we'll look up MES. So /MES. And we'll use this as our template because it's the only one that I have a clean screen on. My other MES is already set up. So now we're going to go over the 4 hour time frame. And this is a 6-month 4 hour chart. As you can see, we were at 46.91 in December. And now we are all the way up here to 57.21. And as you can see, we still haven't reached that 57.21 area. We're kind of driving up towards it. So we'll place a price line there because we're getting closer. Then the current resistance area is about 65 to be exact, but 69 is where we wick up to. So we'll place one of these lines at 65. If I can get it to go there. Add drawing. I just want 65 flat, you know. I just want my hand to be still enough to hit whatever, 65.40. Kill it, whatever. Then another one down here. All right, so now you're looking for the trend above that line. This is another level of support right here. You can see a couple of times we hit that. Obviously, ground floor. First level will be right here. Ground floor final level is actually right here, even though we have the 2 wicks. Obviously, I'll mark out the wicks and stuff like that as well. But the bodies of the candle is where I mark my levels at. So we're looking at a roof up here. We're looking at the middle right here. As you can see, we're above it. We fell below it. Came back up to it again. Stopped, resisted, came above it, and then we went back to the roof. And then we've been consolidating around this for about a week or two, right? And that's how it happens. We consolidated over here for a week or two. We fell lower. Consolidated here for about a week. We fell lower. Consolidated here for a week or two. We fell hard. Ran up, consolidated, fell back down, consolidated a little bit, ran up higher. But this is all over like the period of like a couple of weeks. Ran up here, consolidated for about a week, went higher, consolidated some more, went higher, consolidated some more, consolidated over the large period of like a couple of weeks right there. And now we're looking to see if we're going to bounce higher or go ahead and fall back down without reaching the ceiling. Now when you start to get to the day and you know your day, you go to the 20-hour one day and just select the current week. You don't have to go all the way back or anything like that. The current week has a range as well. We've been in this range. We wicked it out a couple of times right here post market, and then we came right back into it that same night. So you don't even have to worry about this little bit that we wicked out because we didn't push down any further. This is the level. This is the roof. We keep going up to it, struggling. going down to the floor and struggling, going back up to the roof and struggling, going down to the middle and chilling. So now we're just like, okay, fine, it's trending up still, right? And now we're looking to break this roof area right here and break into the next area. But there's always going to form a range. I don't care how long back you go or what day it is, you're going to have a range. Look at how long we've been within this range. Look at how long we were in the range underneath that. Then there's another range, and I've already got, just from marking these out on the 4 hours, you can see that on the 1 hour time frame, it confirms all of our ranges. All of the ranges for like every day of that week. So that is why you start your charting from the top of the 4 hour time frame, right? To give you an outline of what it's going to look like on all of the smaller time frames. Now, if we go down to the 5 day, 15 minute, you start to see that we're still within that range. As I slide left and right, we're at the top portion of the range. We go down to the middle of the range. So now on the 15-minute time frame, on the smaller time frame, you can add your own individual line. So I would place a line right here, kind of close to like halfway. So just about halfway right there. That's just another level of support for the top and resistance for the stuff on the bottom. And as you can see, you're resisted up the top, you're supported right here. You break through the support, you fall lower, you get more support right here. That wicking situation happened on the 4 hour. Even though you're wicking right there, you can see that that's still resistance. We come up here, we resist for a second, we go on through, and then we stay above it ever since. Come back down, get below the supported level again, struggle to get above the support, but at the same time, we've shifted trends to the upside. So consolidation, whenever you're in a trend, is going to be met by continuation. So if you shifted the trend up and you start to consolidate, you're going to be met by what? Continuation. It's not going to consolidate, and all the way fall or anything like that. Now, there are situations where there are massive sell-offs that will cause that to happen, but on average, consolidation is met by continuation. Consolidation, continuation, reversal. You get the hard reversal. You might pop back up for a visit, but it's already a hard reversal. So anytime you get a symbol like this where there's a hard reversal, I usually wait for it to go back up and retest. So I wait for it to retest. If it can't break the line and go any higher, then I'll get into that candle that retest. It doesn't matter if it's the third one, the fifth one, or the 20th one. I'll get into the candle that retest to the downside. Go down to about the halfway point for me. You guys always see me get out at the 200 EMA. It doesn't matter to me if a trade is going to run longer. I like to get in, get out of that thing, and then take my profits. So for me, the 200 EMA is a great move. Honestly, this is a $15 move, more than my average $10 move that I'm looking for. You get the continuation candle right here, which is some consolidation for about 5-6 minutes or whatever. Continue the push down. Pulling back up, you get some consolidation, you get that pop down, another further pull down, and this is just finding the low basically right here. It's coming down to find the low, and then you get exactly what you got up here. Now, in the situation where you're coming from the floor, you have your RSI telling you that you're super low as well, but in a situation where you're coming from the floor, you will often see me have a level sitting there. And so this is where you'll see like my blue lines. And when we tap that blue line, I'll get into this trade even though it hasn't retested. Why? Because it's much easier to fall than it is to rise. But once you've fallen all the way down, when you hit that floor, it's usually not going to come back. Whereas when you hit a ceiling, you'll reject and come on back down. You'll go back up and you'll come on back down. When you hit a floor, it is unusual for that to go back down to the floor again and give you a second chance to get in. Now, in the 1 minute, you'll have several chances to get in. On the 5 minute, you might have a couple chances to get in. But 15 minutes and above, you're not going to have another opportunity. Same thing right here. We came down to this particular floor. Didn't have another opportunity to get in there. This next candle didn't come all the way back down. So in this situation, what I'm looking for is equal lows. You hear me say it all the time. Equal lows, let's go. We're going up, going up, going up. We get into an equal low right here. Start popping up to the upside. I actually did take this trade, I remember, on that particular day at 245. Same thing right here. You're going up. You get a little bit of a pullback, giving you an opportunity to get in. When you get equal with this candle, I'm going to take that trade to the upside almost every time. 9 times out of 10, I'm taking this trade to the upside. And then I probably get out of the 200 EMA once we reach there, looking for that to be a resistance. And if we are going to push down, that to be the thing that pushes it down. Same thing for the 5 day, 15 minutes. 5 day, 5 minutes. You see our lines are still valid there. Not too much changes from the 5 to 15 minutes, except the fact that you can see a larger candle breakdown. Uh, and I'm gonna end the video right here. I won't get into like why I enter all my trades off the 1 minute right now, because it'll make this video too long. And that's just how I go, the process that I'm going through as I'm studying for my week. I start out on the weekly. If we're in a new month, like we're going to be in a new month soon, I want to see what kind of trends we have in a new month. I'm not going to edit this video, by the way. I'm just going to put this up, so however it comes out is how it comes out. I look for a trend on the 4-hour time frame. Not as much worried about the trend as I am worried about the zone. So on 4 hours, I'm looking for the zone, right? On the weekly and daily, I'm looking for the trend. I can see the trend with my eyes, and here I'm looking to find the range that we're trading within from that point. There's an upper range right here that we're trying to get to, but right now we're in this range right here. So I can use these lines that I create or whatever to trade off of these ranges. And you see the wicks and everything. And as we pull back up above the line, I can take the trade. We get to the roof, I can take the trade to the downside. We get down here, we pull back up above the line, I can take the trade. Over and over again. That's how I take majority of my trades, but I'm taking them off of the smallest time frame that I like, which is the 1 minute. Someone asked me if I do the 15-second and the 30-second. No, I don't need that many darn candles on my screen. That's a little bit too into the weeds for me. But that's it for this video. Thank you guys so much for checking it out. This has been another Full Transparency trading session. If you have any questions, leave them in the comments. I'll answer whatever I know how to. But like I said, there's no perfect way to trade at all. There is just ways that can give you a head start if you're a newer trader, so that you don't have to make the same mistakes over and over and over again, and also to simplify it. So a lot of people use the Fibonacci, 50% retracements. They use that little number system, the 212. There are a lot of different strategies out there to use. So me personally, I don't enter the market with a bias or a strategy. I just look at the ranges that we're trading within, and I find areas of interest for me. So I'm like a point of interest price action trader. And a lot of times I'm doing time frame analysis. So what time of day is moving the strongest? Is it 8:30 in the morning? Is it 9 in the morning? Is it 10 o'clock in the morning? So I'm always looking at that. So we get a massive move at 9 o'clock, massive move at 10 o'clock, great trades. Or I'm sorry, 1 o'clock or whatever the case is, great trades. But there's going to be plenty of trades that happen in your trading day. I'll really quickly just go over the best time frames. So when you're experienced, obviously trade whatever the heck you want. When you're a newer trader, I would stay out of the open, just because it's like the wild, wild west. It's a little too wild for newer traders. There are ways to take advantage of it that I will not tell you here, because I don't want to make poor traders. I want people to be consistent traders. Your best bet is to wait to just after 10 o'clock, when that initial rally happens, because what happens is everybody waits to 10 o'clock to get into their orders. So you'll get like a quick pop one direction or the other, but once the trend is set, go ahead and follow the trend, and you can probably get like 30 minutes to an hour out of that trade. For you guys who like to hold longer, I'm not a good swing trader. I'm not a great swing trader. It's not what I do, because I also don't trade options, and with funded trading of futures, you're not allowed to hold overnight. But it works the exact same way, just off of the daily time frame and the 4-hour and weekly time frames. What else? There's not too much else that I can think of that I need to tell you right now. So with that, take the easy money, guys. Good luck out there, and I'll get to whatever questions I see when I see them. You guys have a great day.